Hey, everybody, it's Pete Carmasino here at Chaikin Analytics. This is our halftime show here. We do weekly here on StockCharts TV. Thanks for joining me. We're going to go over a bunch of things today, looking at the market first, and then looking at a few names that look to be moving higher and breaking out. Some are in the insurance area, some are in our healthcare providers. There's one name that was downgraded, was Comcast. We're going to take a look at that as well. But we're also going to look at, take a sneak peek at our daily note that we offer to our subscribers here at Chaikin Analytics. And but as always, we're going to be moving in between the ACP platform, taking a look at the power gauge, how it sets up for the current stocks that we're looking at, and then obviously what that kind of translates to when we look at it on our system as well. So you get an understanding of how we're viewing it. Again, if you choose to use just the power gauge, it's very powerful because it does help you combine technicals and fundamentals, is what we preach here as well at Chaikin Analytics. So if I'm just looking at the market, an overview really quick, I mean, we're up across the board, about 0.5% across the Dow, S&P, and NASDAQ, and Russell up a little bit better, which is great, but we're seeing strength in energy, metals and mining, materials, the chemical industry as well. So what does that really mean? There's a lot of push and pull here. Debt ceiling talk, interest rate talk, all of the stimulus talk that we continue to hear on TV. There's just so many moving parts right now, and so being very selective is probably the most advantageous thing you can do right now. Again, inflation is looming here; it's here, right? It's happening. CPI is at 5%, PPI is in the 8% range, and so there are certain industries that are getting their margins squeezed, and that really have difficulty passing on that increase to consumers. And so we believe that there are a lot of names that are setting up, again, from a technical basis and a narrative and a thematic basis as well. But I think consumers in general are really still strong, are looking to continue to spend, but they could be, at this particular point, we could be seeing the consumer services sector do a little bit better. So again, like I said today, tech's an outperformer. Financials are stronger ahead of bank earnings. Again, earnings per share kicks off this week as well. And what are we seeing that's lagging? Utilities are trailing, right? And so again, with rates moving higher, the dollar's firmer, crude up over 2% today, over $80. And I'll show you, we had a target price of 80 on that for weeks. But again, it's just the momentum behind it is there. So let's take a look. We're going to dive into some of the names right now, look at some of the individual charts, and kind of take a look at that sneak peek of our intraday or daily letter that we have here at Chaikin Analytics. Okay, everybody. And this is the letter I was talking about. On a daily basis, we put out a letter. Really, it's Tuesdays, Wednesdays, and Fridays. We do a few videos in between, kind of like the one we're doing here for the halftime show here on StockCharts. And so we've got a lot of points of contact with our subscribers. And again, we kind of go over just some key points in the market. We do a snapshot of the previous day's market. Again, this is Friday's note from October 8th. And, we just do a little commentary, what's going on. Obviously, we're looking at unemployment numbers. We looked at, the debt ceiling last week, where I hit the kicking the can down the road note that a lot of people had talked about. But again, it was a quick fix. The market had a nice relief rally, and it felt good, across the board. So that's okay too. But again, we were looking at two things: the interest rate levels. We have a target of about 2%. Really, it's kind of a target that I built using a Fibonacci analysis on StockCharts as well. And again, I don't think I'm off the mark too much. I mean, obviously, that's not a big estimated level, but again, it is higher than where we've been. We were down here in the 0.5 point range just a year and change ago, and now we are well into the 1.5 to 1.6% level, approaching that 1 3/4 and higher numbers that we could see. It's potential, right? I mean, you're even seeing large investment banks like JP Morgan coming out saying that the market could potentially sustain 2.5% on the 10-year and even $130 oil. I mean, let's hope we don't get there. I mean, gas prices are creeping up every day, but from the momentum that we're seeing, crude oil, again, this was the chart from Thursday night. where crude had kind of just punched into the $80 range, and we moved our target up to 85, which again, certainly not aggressive. It's very conservative, but it is higher than where we are today. So if we can see those moves, that's really the target that we're looking at. It's somewhere between 85 and 90, but the first level really is just psychological. After 80, it's 85, and after 85, it's 90. That's just kind of the way it works. But again, the momentum is there, and you're seeing it now. We don't chart the continuous contract, but we have an ETF. We don't specifically rate this, but we do build technical analysis on it. And as I said to you many times, our relative strength is very important in our decision making. And again, at the $30 level back in December is where our relative strength started to change. It waned a little bit here, and it's really not terrible, but I can see that it went negative, but it was really in a range bound setup there, right? And then when it got positive again, which is right around here at that 48 level, it popped right to 55. And so correlate that to the chart we were just looking at here, you can start to see when we were kind of getting a little bit of push here was the first or second week of September. And if I go back and spread this out a little bit here and get into the September months, it's kind of right around here, right? I mean, right around this breakout level of 68 and change, which pushed it up to 80. That's a big move, right? That's a big move. So again, you've got the ability to kind of track the things. But let's get into some of the charts. We're going to look at Bunge, which is a chemical name, but it's really focused into the food product area. And again, a consolidation. We are very bullish on the name. So there's your fundamental side, right? And when you see these kind of breakouts and pullbacks, you'd like to know, do I have a fundamentally strong company, or is this just a technical trade, or what is it? And so right around that September 22nd level, if we go back and I take a look at BG here, I'm going to put these in order of symbol. And I go back to that September area, we were neutral, but I want to point something out. We were neutral positive, and you'll see that, right? You'll see that here. It'll say neutral with a little plus mark on it. And we were neutral positive. What that means is that it is a bullish name with strong fundamentals that's under its long-term trend. Now, when it breaks above, we upgrade it. Same thing on the downside. When it breaks down below, we downgrade it to a neutral positive. That's just alerting you to the fact that it's a bullish, fundamentally rated company, but it had a technical breakdown on our long-term trend, our specific long-term trend here, okay? Now, when it breaks out above it, the opposite occurs, right? We go back to bullish, and we're upgrading it because we've got technical momentum. That's combining the fundamentals and the technicals, very important. All right, so I'm going to move quickly on the next names here because I'm running out of time. Comcast was downgraded, all right? First initial move here was back in the middle of September. We can see the technical breakdown, the crossover of the 20 and the 50 here, right around 927. But let's go see what our charts were saying. And again, even today, with the downgrade from some of the major banks today, we actually have a relative strength sell and a relative strength breakdown that's occurring on the charts alongside of this the external factors. So from a relative strength standpoint, we have been really negative on the name since April, right? And so what price was that? Somewhere around 55. Did it get away from us a little bit? Yep, up to 61. That's about $6 or so, a little bit more than 10%. But again, money flow started to change here when you had that big downdraft. And now it's overbought, which is why we're getting our sell signals here, because we like to be in a technical position that's a little bit on our side, right? So if it moves higher, it gets overbought, but we know it's got negative relative strength. The algorithm automatically puts that sell signal. Now, you're not going to see that on this, but if you were a subscriber, you'd see those. Let's look at Molina Healthcare. And again, healthcare provider on the breakout, very bullish power gauge. And if I go to MOH here on our charts, you can obviously see that the relative strength started to break here. It pulled back slightly, got oversold, actually is oversold right now, and really setting up technically for a continuation. Mosaic, again, another name in the specialty chemical area, materials, you can call it, but it's really focused on the food area. Wow. Just what can I say? Consolidation, breakout, pullback. And that's where you want to be able to see. And again, if we were looking at this when our specific power gauge was changing, it was changing right on this breakout, right around September 27th, September 28th, around that $35 level. And that is just a continuation, got great momentum here as well. So, we can see why these names are pushing as high as they are. And then the other one is Penske Automotive. Look, they operate car dealerships. We know that there's a shortage of cars, but there's really no lack of demand. I can tell you that. And if you look at PAG on our system here, you can see where that relative strength started to break out again. Again, it gave you some time where our power gauge turned bullish and the relative strength started to improve dramatically. Now, never really got oversold here from a relative strength standpoint, but on our timing indicator, we did have kind of an oversold setup really around the $85 level. So again, you'd be notified of those when those happen from our system if you were a subscriber. So take a look at these names. Again, while being able to just grab the power gauge is excellent opportunity, having a little bit more depth of knowledge of what that means obviously just makes it more powerful. Okay, so let's look at Prudential, and then we're going to look at Thermo Fisher before we end the day here. And Prudential, again, in the financial life insurance, obviously, this looks like almost like a quadruple breakout. If I take this 107 level, I see it once, I see it twice, I see it 3 times, I see it 4 times. 5th time's a charm with a big move on the upside. But let's look at what our charts were saying from a relative strength standpoint. Just getting better here, right around that 105 level. So nice to see that move higher and breaking out. We did have some negative money flow. That happens time and time again, but we've got a strong trend, a stock in a strong industry, doing very well, looking pretty strong here. So let's end. The last one we'll look at is Thermo Fisher. Obviously a very bullish name. You can see from the chart, not only there, but from the power gauge as well. Experts and technicals are pinned to the very bullish side. And if we look briefly at TMO, we've got one of our good setups, which is an oversold setup with strong relative strength and fundamentally intact as well with a very bullish rating. Okay, folks, that's all the time we have for today. Again, thanks for joining me here on the Halftime Show. I'm Pete Carmasino with Chaikin Analytics, the Chief Market Strategist. And we are here every Monday, kicking off at 1:15 to 1:30. Again, 15 minutes. I wish I had more time. There's so much to talk about, but I'm glad you could join us. We're here every week. Again, Halftime Show, Chaikin Analytics here on StockCharts TV. Thanks again for joining me. We'll see you next week.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.